let's get started on the Kiwi. And let's go through our IPDE process, right? This should be a pretty simple one. Identify, what is New Zealand dollar doing? What would you guys say? If we're walking through this repetitive process that keeps us on track as traders, what would we say that New Zealand dollar is doing? Where are we at? All the fun stuff that we always address in these questions. We are at a major level of structure, right? You can look left once, you can look left twice, and you can see that we have hit previous structure. Do some underlapping levels of structure, so let's keep that in mind as well, a little bit lower, but we are at a pretty significant level of structure, and price is currently testing that level. So at this point, and again, what I want to do is I want to create my bias in the market. And I want to ask myself, Akil, do I want to get long or do I want to get short? And based on this information, I can tell myself I only want to get long, right? I don't want to get short at structure. I only want to get long. So now my brain, my mind is focused on long opportunities. As we go down to the lower time frame, we're going to get some more information. Now, how would you guys classify this sticky mouse? Again, I'm going to get batteries at some point. How would you classify this candle? What would you call it? If you had to dial it up on the phone, what would you call it? An elephant, yeah, an elephant. And also, what else? I guess with an elephant, I wasn't even thinking that way, but yes, you're right, it is an elephant. That'll come in handy later. But it is a what type of candle? Is it a weak candle, a strong candle, high momentum, low momentum? High momentum candle, right? Big range, right? Big range candles are high momentum. Strong bearish, right? Because we close maybe in the bottom third. Yes, of course, in the bottom third we close, right? High momentum candle, right? So this is a truck moving fast, moving fast, moving fast. And then what happens on the next, 5 candles after that? What happens to our MOMO, our momentum? It shifts, does it not? It decelerates, right? And we can tell this by the size of the candle, right? Smaller candles, right? But also the grade of the slope, right? Look how long it took to get from this price point to this price point versus this price point to this price point, right? So we can see this loss of momentum pattern where we're here and then we're kind of fading out, right? So we've got a loss of momentum pattern, which is good. I always think I like to think of it like the baseball reference, right? Where like if you throw a baseball or any type of ball in the air, it comes out of your hand at a steep trajectory, and then it kind of reaches its apex and kind of like goes like that. So think the exact opposite for this. We fall down, and then we kind of lose momentum, right? This is a good sign that says, hey, we may be in for a little bit of relief. The selling pressure is starting to slow. Relief may be coming. We also know from our higher time frame analysis that this loss of momentum pattern, this deceleration, is also coming where? Is it random? Is it in the middle of nowhere? Remember our conversation yesterday on double tops, and I said I don't really like to think of double tops as a strategy. It is the what, but what's more important than the what is the where. Yes. So we combine the two. This is the loss of momentum pattern where we would expect, hey, maybe some bullish relief at an area of structure where we would expect some bulls to be interested, right? A fight to occur. So we got those two things lining up. So we're gonna stick to the 4 hour now because there's actually an entry on the 1 hour that happened when I was asleep, right? But so now the question is, okay, I know I want to get long from my identification phase. I've confirmed that long bias from reading price action and doing my technical analysis. The next question, next 3 questions, right, are EST, entries, stops, and targets. Now, entries should be pretty simple. Again, we always talk about entries and stops should be easy because they're typically pretty static. They're the same, right? You should probably only have a few ways to enter, right? If you're looking at a chart and going through a book of 1,000 ways you can enter a trade, you don't have one way to enter a trade, right? You should know that, hey, my entry reason is boom. Oh, sorry, I can't snap with my right hand. I meant to my left. Boom, higher high, higher close, or boom, boom, double bottom, or boom, 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 this, or boom, 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 that, right? Whatever it is, you should know that. We should have an idea for our stops based on our entry. My stop is always below the low of the candle, 1 ATR below, whatever it may be. So that stuff should be pretty simple. The part that sometimes requires analysis, depending on your method, is going to be your targets. So let's start there, right? Target taking. Shoot me some ideas, guys. Shoot me some ideas. I already know what I want, right? I've done this analysis already, and I'm waiting, patiently waiting, although I'm very mad that I wasn't able to catch the thing that happened last night that I'll show you guys in a little bit. That would have been amazing. But target taking. I'm seeing 59 even that you guys are writing in. What else you got? And I'll walk you through my method. 59. Paul raises that 59 even. Says 59.35. I see that 59 even, 59.35, right? Really small ATR on the New Zealand dollar, so keep that in mind. No, Lynn says 59.09. Ooh, look at that. 59.09, right? I like all those levels. So here's how I started off. And you guys already know the answer because you've been with me for many, many, many years, right? Look at my previous level of structure. So if I were identifying a kill zone in the traditional way, where we look at new structure lows and outside returns, here's my low right here. Here's my high right here, right? That is my initial kill zone, right? You could put a little line at the bottom if you want for that psychological number right there. Just keep that in mind. But this is my kill zone. Someone mentioned this earlier. We also have an elephant in the room. Can you see it? Of course you can, because it's an elephant, right? So my elephant zone is going to break that down a little bit. I'm going to take, again, the previous candle to this the elephant candle, and I'll move the elephant over to make sense. And that's going to look like this, right? What else can I bring in to analyze and determine where I want to put my targets at? What other tools may I use? Fibonacci and volume. It's like we've done this before. Yeah, Akil, you do the same thing every single day. I love those comments on the YouTube videos where it's like, Akil, I love your videos, but they get kind of boring because you analyze the markets the same way each time. I'm like, yeah, I do. Like, I'm excited. I'm proud. I'm like, yeah, that's what I want you to say. Yeah, I'm consistency. Yeah. But, boring is, it could be boring, but does it get the job done? And that's all that matters, right? So we can bring some fibs in, Fibonacci extension, retracement, swing high to swing low. Understand that this may have to switch a little bit if we continue to push down. And then I want to bring volume in, but first I want to answer a question. Alex says, why the second before the elephant for the narrow kill zone? Not the second, the first. It's this green one. This one right there. So the candle previous to it. So it is the first, yep. So now I want to bring some volume in because when I initially looked at this, right, I wanted to shoot for here to targets, right? 59.09, same level that someone typed in earlier, because I'm very conservative, and you guys know that I expect the first sign of danger. I'm the one where, when danger comes, I'm the first one to run. That is how it is in real life. That's how it is in the markets. But you guys know over the years, I've worked really, really hard on not necessarily changing how I trade and what I trade, but getting a little bit better with tightening up my stops, losing sooner. Sounds bad, but it's a trade management tactic, losing sooner. But also working with my targets and trying to eat a little bit more on my wins. And that's where volume came into play. Again, complete accident. I was researching something else in volume, but stumbled upon this. So in volume, again, we look for the voids, right? We look for the voids. And you see that we don't have a pickup in volume really until we get right around that elephant zone, around that 3D2. So boom, this is the level that I'm looking for, 59.18. So we do the rest of this based on the 4 hour here. So I know that the earliest I can enter would be a higher high, higher close, right? I know that my stop's going to be an ATR below the low. The ATR is 20, 1, 2, 3, 4, 5. It's probably going to stay the same. I don't see any reason for it to change. Let me just double check it. ATR should be, 21. I will adjust it if it ends up changing. I don't think it will. So let's find the lows right here, which are 58.49 minus 21 is going to be 28. And I know that is where my stop loss must go. We spoke about this yesterday. We also know that I require a minimum one-to-one risk reward. So I'll take my Fibonacci retracement from my target down to my stop, and I know that I can enter anything that is below this 50%. So the question is, can I get a higher high, higher close that completes in that zone? Yes, it's just going to be tight, right? It's going to be tough. So I know that. I don't look at it as a negative because it is what it is. I can't do anything about it aside from like sabotage my trading. I don't want to move my stops up, do I? Do I want to be like, oh, I'm going to move my stops up to make it work? No, that's a bad idea. Do I want to move my targets back to make it work? No, that's a bad idea, right? This is why I do that stuff first, so it's not influenced, right? I don't want to influence the rest of my trade, right? So I just have to deal with it. Or I prepare for an alternative entry. Okay, if I don't get the higher high, higher close, what is my alternative entry? Do I have a second shot at this? And I'll wait for my second chance. And if I don't get my second chance, then, maybe a third chance. After the third chance, I have 3 strikes in a round. I have nothing left after that. But I'm setting up this trade in advance so I know exactly what to do. I know my A scenario, I know my B scenario, I know my C scenario. And now I just wait, right? I just wait. I wait to see if the market's going to give me what I need. And if it does, I take it. If it doesn't, I wait. But I've marked my trade out. Now, for you hourly traders, right? And I'm allowed to go down to the hourly. And now you're going to see why I got upset. Who can tell me what we had on the hourly? It's a little crowded here, so let me delete some of the junk here. Who can tell me what we had on the hourly? I know you see it. A beautiful double bubble, right? Double bottom here on the hourly. RSI oversold, RSI divergence, right? And we got to close right at the bottom right here. You couldn't have done this any better. So let's remeasure this out from an hourly time frame where our ATR is about 10, right? We're looking at 158.49s. We're looking down at 158.40s as that stop loss. Let's move this bad boy up to here, right? If you're looking for the same target level, risk reward, where you at? Here we go. Looking for the same target level. It's gonna make me mad again. Stops here. Targets, right? If you're conservative, a retest of the highs right here. This is where I would actually take a target 1 based on the lower time frame. I'd take 1 off here. Still get a great risk reward because of this is the start of that descending channel. Target 2 or first target, depending on, again, how you roll. We're looking at, there we go, the same level we spoke about on the higher time frame. A move back into this zone right here. And of course, if you want to hold a third target, I didn't look at this too much on the daily. I would say at the most, maybe 60-23s. You know what? You don't necessarily want to be bearish dollar, but yeah, 60-23s, I would say. We have been in a channel here, so if you're super brave, you can trade it across the channel. I'm not that ambitious, but those are different options if you want.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.